Good afternoon, viewers. I am Simon Masinde. Welcome to our today's episode where we want to discuss about the difference between the people who are rich and those people who are poor. We want to discuss and understand why do we have that big difference among the two classes of the people. Now, to begin this episode, I want to begin in the words of Manoj Arora. And this is what he said: to achieve what 1% of the world's population has, and that is in terms of financial freedom, you must be willing to do what only 1% dare to do. Hard work and perseverance of the highest order. I will repeat again. To achieve what 1% of the world's population has in the form of financial freedom, you must be willing to do what only 1% dare to do: hard work and perseverance of the highest order. That is what Manoj Arora said. Now, in this case, the 1% that he is speaking of in this quote, these are the people who are wealthy, those people who are wealthy. One day somebody asked me, what is the difference between a wealthy person and a rich person? Now, I will encourage you viewers to help me answer that, but this is the answer that I gave to him. A wealthy person is one, even if any other financial crisis comes, he cannot easily become poor. But a rich person, if there is a financial crisis, let's say there is a tough economic times, he can easily become poor. Now, how this difference come about? Now, the rich person, the wealthy person, when he climbs one step in the wealthy ladder, he brings another person and puts him under. When he goes the second step, he brings this one and goes up. So every time he makes one step, he brings another person one step. When he goes to the second step, the next person is growing. When he gets to step number 10, he has 9 people under him in different levels. So he makes sure that he inspires, he motivates, he encourages, he supports the people under him. So that anytime there is a problem in his financials, these 9 people will be able to support him and retain him in that same level. But a rich person is a person who goes all alone. He says, everyone for himself, but God for us all. That is a rich person. He goes all alone. He doesn't bring other people up. So in this case, anytime there is a financial issues in his life, he will find himself begging for bread. Now, in this episode, just like I mentioned, today we want to demystify the rich and the poor. The rich and the poor. That is the people we are going to talk about in this episode. Now, viewers, the greatest difference between the rich and the poor is the mindset. Now, the poor will always have a negative attitude. But the rich will always have a positive attitude, even if the financial circumstances are tough. Even at tough economic times, he will always have a positive attitude. He knows that through hard work, through perseverance, things will change. He will make money, he will create wealth. But the poor, during the financial hard times, economic times, instead of working, he will be doing his hands like this. He will be folding the hands. He will be sleeping. He will be afraid to go out and look for work, to do anything to do out there. And at the end of it all, he remains to be poor. So the only disease that is in between the rich and the poor is the mindset. So in this episode, we want to talk about, these two people. Now, the first thing I'll begin in this episode is to help you understand two key terminologies that we will be encountering them as we go by in the episode. Now, the first terminology that I will want us to understand is an asset. What is an asset? Now, you don't have to go to any business school or to have done any business course to know what assets are, because this is a term that is used widely. Even the media people, most of the time, they use it. Now, an asset is anything that puts money in your pocket. Let me use a simple explanation even for everyone to understand. So an asset is that anything that you own that will bring money into your pocket. While a liability, we also want to discuss about liabilities. A liability is anything that draws money out of your pocket. If you had 1,000 shilling and at the end of the day, you don't have that 1,000 shilling, it has been taken away by something, then that something is what we call a liability. But if you woke up in the morning and you found that in your pocket there is nothing, you don't have even a single coin, but at the end of the day, you have collected 1,000 shillings into your pocket, definitely that is what we refer to as an asset. So that is one of the things that separates the poor and the rich. Now, a rich person will collect a huge amount of assets, while a poor person will accumulate a huge amount of liabilities. So that is one of the things that separates the rich and the poor. Now, as we have discussed about the assets and the liabilities, now in this episode, I want to encourage you that let no past background limit you not to do something. Work hard. Wake up early, do something, and let no day pass without you going through any financial literacy materials. Let no day pass without you thinking about how you can generate wealth. Let no day pass without you thinking of any activity that you can engage in so that you can create some money. Now, if you are employed, there is need for you even to have what we call passive income. Now, some people will say that, I was born by a poor dad. I was born in a humble. They like using the word humble. Some people will say, I was born in a humble background. So, that is why I am living like this. But you are not limited. You just work hard. You just be committed. You persist in that thing that you do. And eventually, there is no one who said that because you are born in that family that was poor, you are born in that humble background, that you cannot improve it. Through your hard work, through your sweat, through your persistence, through your courage, through your focus, you will improve that family background, and you will find yourself moving from the poor family to the most wealthiest family. Now, how about those people who are born in a rich family background? Does it mean that because you are in a rich background, you are born in a rich background, so you cannot work? You begin sleeping, just loitering around, idling? And remember, an idle mind is a devil workshop? No, you still have to work. I have never seen any person that has ever said that I have amassed enough wealth, so it is time to sleep. Even when we talk about these people, the people we call Steve Jobs, another person like this one who owns Microsoft. The name is, I'm losing the name. Write for me the name. I'm just forgetting the name. Please write the name in the comment section. The company like Apple, people like Jack Ma of Alibaba. Do you find them just sitting? No, they are still working, yet they are considered to be one of the richest people all over the earth. Look at a company like Safaricom in Kenya. It is among the wealthiest company, is the most profitable company in Kenya. But has it stopped producing whatever the service they are producing? They continue. So there is no time you can say that you are rich. So it is time for you now to stop working and fold your hand so that you begin eating whatever you amassed. But instead, people continue to work. So in this episode, I want to encourage my viewers and everyone, including myself, that working is a continuous process. So working is a continuous process which you should embrace every day that you wake up. Now, the next thing that I want us to discuss about is, now I have encouraged you that every day you wake up, every day you have an opportunity. Apart from working, you need to read financial literacy materials. You need to read financial literacy materials. You have worked hard, yes. You have gotten money, yes. You have created wealth, yes. But there is a way on how to manage that wealth. So if you don't have the knowledge, you don't have the information on how to manage the wealth that you have created through hard work, you will not be able to manage it. So therefore, as an investor, as a person, you need to engage your brain in financial literacy that will help you even to manage the wealth that you have created. So financial literacy doesn't have to be for accountants, financial managers, tax experts, auditors, or entrepreneurs only, but it is for everyone. Even a farmer needs to get that financial knowledge. Even a teacher needs to understand what is financial information that is around. So as it will help you as you go by in investing. So financial information is so good to every person because it helps you even as you create your wealth, as you invest. How do you manage those investments that you have created? So that is another thing that you need to invest in. Another thing that I want us again to discuss is, now another difference that I want us to talk about when it comes to the poor and the rich mindset. In this episode, we are only dealing with mindset because the problem is in the mind. Now the poor and the rich, all of them work. But the only difference is when the poor earns that income, let me call it a salary. When a poor person earns an income, the whole income is dished out in form of expenses, because after earning a salary, he will pay house rent, he will pay electricity, he will buy food, he will have entertainment or what we call some luxuries of life without even thinking of buying an asset or investing in any form. So a poor person will survive from paycheck to paycheck. But when we come to a rich person, when he earns that income, he will, he will cater for his family or personal expenses, but there should be something spared for investment, for buying that asset, for buying anything that brings back a return. So a rich person always concentrates on getting a return after spending from expenses. There is something for investment so that he gets a return. For example, if a rich person is paid, he will take his money to purchase shares from the Nairobi Securities Exchange if he's in Kenya. He will buy some land. He will buy some government bonds, treasury bills, and at the end, he will get what we call interest, or for other institutions, they call it dividends. So, so you find that whatever he got at the end of the month was invested, and some more has come through the money that he was paid. But for the poor, he doesn't invest, he spends the whole of it, and most of the time, whatever the area he spends to is higher than the income. So he finds himself in what we call debts. So the difference is investment and debts. The poor person will spend the whole of his income and find himself accumulating some debts. But the rich person will spend and have a portion for investment so that he amasses what we call assets. Now, most of the time, because of now the rich investing the money in an asset, in something that generates income, you find even when they are asleep, the money is working for them. So, even if he's asleep, even he's not working, he is not afraid that he will lack an income. But the money that they have invested will be working for them. For example, allow me to give an example, viewers, in this episode. Number one, if you have invested your money in a SACCO, at the end of the year, even if you are not working, the money that is already invested is earning something. So at the end of the year, you will get what you call a dividend. If you bought some shares in a certain company, at the end of the year, when the company declares a profit, you will get a return, something to keep you moving. If you bought what you call a government bond or a treasury bill, at the end of a period, the government will declare what you call interest. So you are not working, but your money is working for you wherever you invested. So that is a big difference that we have between the rich and the poor. Now, let's talk about the poor. Now, the poor, if he earns, let's say, 10,000 shillings a month, the expenses are always more than the 10,000. So, you find that 10,000 income and the expenses that this poor person incurs are more than the 10,000, or they are equal to 10,000. So there is nothing for investment, but the only that is available for spending. So he doesn't amass anything. And most of the time, not most of the time, but always, you will find that his assets are lower than the liabilities. And in this case, most of these assets maybe are just from hereditary. He got from the parents, because there is nothing for investment actually. If the income is equivalent to expenses, or the expenses are more than the income, where shall be money to purchase assets? So most of the time, the assets are smaller and the liabilities are bigger. Remember, we said liabilities are the things that take out money in your pocket, and assets are the things that bring money into your pocket. So take that in mind as we see this. If the liabilities are more, is it not a road that leads you to poverty? Yes, it is. If your liabilities are more than your assets, definitely you are on the road that leads to poverty. It's a road that leads you into debts. Because whatever you are spending is more than whatever you are making. So it means you have to go and borrow from here, go and borrow from there to make up for the difference of the income that you so need but you do not have. So that is a road to poverty and a road to debts. Now, when you look at the statements of a rich person, you will find that the income that they get, they spend less and they have a portion for investing. So when you look at his statement or her statement, the assets that he has is more than the liabilities. For example, the things that bring money into his pocket is more than the things that get money out of his pocket. So at the end of it all, he has something in the pocket. But the poor person, every time you go there, there is nothing in the pocket, because the things that take money out of the pocket are more than the things that brings money in the pocket. So but the rich person, things bringing money into the pocket are more than the things that are taking money out of the pocket. So the assets are more than the liabilities. And so in this case, the income is greater than the expenses, and the assets are greater than the liabilities. Why? Of course, the assets that he invested in is bringing in income. The income that he is working for, added together, the passive income is higher than the expenses. And the assets that this person has accumulated are higher than the liabilities. That is a rich person. That is a rich person. Now, these assets that his person has accumulated generates more income to cover for all the expenses. All the expenses. This is what we usually hear some airlines, that when you book the ticket with them, they say all expenses paid when you go for Christmas. So all expenses are covered by the income that the assets are generating. Now, you find that this income that is generated by these assets, again, are reinvested. The assets are generating 1 million a month, and the expenses that you are supposed to be paid from this income is 500. So the profit, let me call it the profit, because profit is income minus expenses. So this 500,000 that remains is again reinvested into the business, so that the next season it produces more. That is the mathematics of a rich person. That is the mathematics of a rich person. Investing and reinvesting. Investing, reinvesting. Now, the next thing that I also want us to talk about in this episode is now, the rich and the poor, all of them work. From the start, I have been talking about working. The rich and the poor, all of them work. But the difference in this working is the end result. Because now the rich person, when he works hard, he works hard to find a good company, a good business to buy. A rich person, let me repeat, a rich person works hard to get money and to find a good company or a good business to buy that business or to buy that company, or to invest in that business or to invest in that business. Next, now the poor person works hard, yes, but wants to get a better company to work for, to be employed, in short, to be employed, to work for. And what motivates him is a salary that comes. But from that salary, he is also poor in the mind that he cannot even invest. But whatever he gets is good for consumption. It's only for consumption. And as we have said, they don't amass any wealth, but they amass debts, which is a road to poverty. So they work hard, yes, but they don't work hard to buy a company or to invest in a company, but instead they work hard to get a good job. That is the difference. Now, the next thing that I also want to discuss is the poor person are afraid, they fear risk. But the rich person has a way of managing risks, because in any way risks will come. There is no one who will tell me that he doesn't come across any risk. Risk is everywhere. Even when you wake up in the morning and you begin walking, there is a risk of falling, hitting your foot on a rock and you fall. It's also a risk. So there is no one who can say that he doesn't experience any risk in their life. But the difference is, how do you manage the risk? So that is what the rich person pride in. The rich person pride in managing the risk. But the poor person takes pride in running away, in avoiding the risk, and at the end of it all, because every business venture is a risk. So he doesn't invest because it is risky. So at the end, he gets nothing. So risk is another thing that separates the rich and the poor. So if you want to become rich, manage your risks. Take that risk and manage it. But if you want to get poor, don't take that risk, don't manage it, and you'll have nothing. So risk is a key component when it comes to the rich and the poor. Next in this episode, viewers, we are demystifying the rich mindset and the poor mindset. And at the end of this episode, I want to ask a question. Which line do you want to take? Do you want to take the rich mindset, or do you want to take the poor mindset? So go with me as we continue discussing these issues that we need to bring on our table, so that we get to be rich and not poor. Now, the rich person takes pleasure in people. The rich person takes pleasure in people. The people are not the burden to him, but instead, people are his assets. If you produce a product or you produce a service, definitely you need people to purchase it. So there is no way you will say that you don't want to work with people. There is no way, because the people can be your creditors, the people can be your customers. So a rich person takes pleasure in the people, but the poor person, on the contrary, complains about people. He feels that people are burden to him. He wants to walk alone, or she wants to walk alone. So in this case, the people who could finance the business, he shuns away from them, and there is no capital for the business. So if you want to be rich, take pleasure in the people. And finally, viewers, in this episode, it is the rich people has their asset as their income, while the poor people has their profession as their income. Now, all the rich and the poor, all of them work for an income. They work for an income, they work for revenue. Let me use the other name as revenue. They work for income, they work for for money. So, in this case, a rich person has their assets as their income. Why? Because the assets will generate income. But the poor person will take the profession as their income. Why? When they are employed, at the end of the month, they get a paycheck. So that is their income. So what about if that profession is not sustaining? What about if the person is retrenched and then poverty comes in? But for the rich, the asset continues to generate income. The asset continues to generate the income. So in this case, it is growth and growth and growth, because the asset continuously generates income. This year it generates, next year it generates. So viewers, in this episode I wanted us to talk about what makes people to be rich and what makes people to be poor. So don't accept to remain there poor, but instead change your mindset, because what makes you to be poor is only the mindset. So work on your mind, work on your mind so that you can become rich, so that you can generate some income, so that you can generate wealth and you become a wealthy person. Just, it takes one step for you to change a fortune. It's only one step, and that step is through changing your mindset. All of us can be rich and all of us can be wealthy. There is nothing that can stop us to getting that position. So as I conclude this episode, I still want to talk about the key components that have been discussing in this episode, and it has been assets versus liabilities. So please ensure that this year 2022, today is on 5th of February 2022, you amass, you accumulate more assets